The current presidential administration is working on a few new proposals which will impact your bank account. So if you want to understand what's going on, make sure you watch this video until the end. What's up everybody, I am Jaspreet Singh from theMinorityMindset.com, where money minds rethink rich. Our economy and money is changing. Ever since the pandemic hit in 2020, things have not been the same. First, we started to see more inflation because when the pandemic hit, the economy shut down and people lost their incomes, and that's when President Trump signed the largest stimulus bill in the history of time at around $2 trillion. And that's when now President Biden said, oh no you don't, and now he's working on also a $2 trillion infrastructure package. Then you had the changing economy because in 2020 when the pandemic hit, so many Americans lost their jobs because companies shut down and they started letting people go. And so you had a massive chunk of the country on unemployment, and even till this day, people are still not fully back to work. And so you have a country where you have companies that are looking for jobs, but people that are not working. Part of the reason for that is people don't like the paychecks that they're getting from their jobs, or they don't like their jobs. Because during the pandemic, people realized that, hey, this whole working from home thing is not so bad. I can be more productive from home, I can spend more time with my family, and I can be happier. And so now people are looking for jobs not just to pay them a big salary, but jobs that actually give them a lifestyle that they like. Who would have thought that you could work a job that pays you decently and keeps you happy? Along with that, we have a ballooning national debt. We have right around $29 trillion worth of national debt now, and our national debt is growing way faster than our GDP, our economy. And then on top of all of that, we have all the supply chain issues going on in our world and our country, which is making it so hard for companies in the United States to source products and create products and sell stuff, which is why everything is so expensive, or at least that's part of the reason why. This is where the Biden administration is trying to do three things to address all the financial issues that we have going on in our country. First, we have what a lot of people have coined the $600 rule, which is now transforming to the $10,000 rule. I'll explain what that means. Then we have some inflationary proposals, and we have things like the infrastructure package. I'll talk about the costs of that. And then we have potential tax hikes coming to pay for all the government spending and all this national debt. So let's talk about these three things. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. And if you're interested in investing your money in the stock market, or you are investing your money in the stock market, you should check out our Stock Market Insiders program, because the Stock Market Insiders program is a weekly coaching program where you can get access to stock market coaches and coaching sessions every single week. So every week you are going to have a live coaching session, group coaching session with one of our coaches, where you're going to learn a new stock market topic. It might be how to understand a cash flow statement or how to read a profit and loss statement. And then because these lessons are live, you will be able to apply what you learned to something that's going on in the market today. So if Tesla just released the earnings statement, you might understand how to read a cash flow statement and then read Tesla's cash flow statement. That way you can put what you learned into action. Plus, you're also going to get access to our exclusive community of serious investors. That way you can ask questions, you can talk about your investment ideas, and you can network with other investors. One thing that was very important to me was to keep this coaching program very affordable. So Stock Market Insiders cost less than the cost of dinner for two. And if you still don't believe me, you can try it out for free. We have a free 10-day trial where you can go through Stock Market Insiders, you can attend the live coaching calls, you can watch the previous calls, you can get access to our free stock market class that you get when you enroll, and you can go through the entire class, and you can chat, meet the investors, you can ask your questions, and go through the entire program and then decide if it's right for you. So if you want to try out Stock Market Insiders for free with our 10-day trial, I'll put the link to where you can do that in the description below. So let me start by talking about the $600 rule, which has evolved into the $10,000 rule. But let's start with what the original proposal was, that we can understand what it is now. The $600 rule started off as a proposal saying that if you made any sort of financial transaction more than $600, so your rent, your car payment, anything else, if you paid $600 for anything, the IRS would need to know about it. So your financial institution, your bank, Venmo, wherever it is, they need to report all of these transactions to the government. So the Wall Street Journal put out an article explaining this with the title, "The IRS Wants to Look at Your Bank Account," and it goes into the article talking about how the commissioner of the IRS, the Internal Revenue Service, wants banks to report annual cash flows for ordinary account holders, and the Treasury Secretary, Janet Yellen, is promoting the plan. So just like with the business, anytime you propose something, you have to look at two different sides. You have to understand the cost, and then you have to understand the goal of the plan. So let's start by talking about the goal. Why does the government want to know every single transaction that you make over $600? Well, the Treasury Secretary, Ms. Yellen, says that the goal of this reporting will be to help catch wealthy tax dodgers. Now, in theory, that makes sense. You don't want wealthy people evading taxes because if you are illegally evading taxes, you're doing something illegal. But what's interesting is they say that the goal of them monitoring all transactions over $600 is to catch wealthy tax dodgers. But who makes a transaction over $600? Pretty much anybody who has a job. Because if you're paying for rent, if you're paying for your mortgage, if you have a car payment over $600, or if you go out and you buy a sofa, well, now you have a transaction over $600 and the government wants to know about it. The government wants to know every transaction that you're making over $600, and that's where things start to not make any sense, because if you're trying to catch wealthy tax dodgers, why do you want to monitor the bank accounts of pretty much every single American? Now, the Minority Mindset is not a channel about understanding the Constitution and understanding the meaning of freedoms in the United States, but since I am an attorney, this would be one of the largest invasions of personal privacy in the history of American history. Now, this is where the government started to get a lot of criticism from people on all sides of the political spectrum, because the United States is supposed to be a free country where everything that you do is not supposed to be monitored by the government or the IRS, because that's why people come to this country. They want freedoms. And very interestingly, even when it was still a $600 proposal, the Treasury Secretary Janet Yellen went on to public TV and started defending why they need to know every transaction that you make over $600. This New York Post article explains why, because Janet Yellen says that there is a, quote, enormous tax gap in the United States, and that is the reason behind these proposed tax hikes, which I'll be going over in just a little bit, and this information collecting, saying that this gap in taxes is the reason why the government needs more information and why the IRS needs to know every transaction that you make over $600. Now, you're free to believe whatever you want. You're free to believe that the government should not do this, and you're free to believe that the government should monitor everything that we do in our bank accounts. This is a free country. You can believe whatever you want. But let's talk just on the financial side of this, because their goal is to now monitor what you're doing in your bank account, what you're buying, and where your money is coming from. So they want to know everything that you're doing over $600. I'm going to get over to this $10,000 new rule in just a second. But we have to also look at the cost, because this is what's going to affect you financially. Because this now monitoring is going to have to come from somewhere. And so now banks are going to have a higher cost. So if you keep your money in a bank or in Venmo or in any other financial institution, they're going to have to report every single one of these transactions, which is going to be very expensive because there's a lot of transactions over $600 that happen. And so they're going to have to hire more staffers, bring on more software, bring on more things, which means you're going to have a higher cost at the consumer level, which means you could potentially see higher bank fees and more costs, or potentially, I mean, they can't really lower interest rates anymore, but there would be a higher cost for banks, which would ultimately come down to the consumer. And then you have the higher cost for the IRS. The tens of billions, if not hundreds of billions of dollars it would cost to now hire more staffers to now monitor every single transaction over $600. That would be an insane undergoing to try to see what is worth monitoring, what's not worth monitoring, and what's worth pursuing. Now, the whole idea, their goal is, okay, we're going to spend tens of billions, if not hundreds of billions of dollars to do that, and then hopefully we will be able to find tax evaders and be able to collect on more taxes than the money that we have to pay to do that. That is their goal. Will that happen? I don't know, but this is the cost that we have to pay, and this cost has to come from somewhere. Somebody has to pay for this cost. They're hoping that they will be able to find more tax dollars, but if they don't, then the burden will be paid for by taxpayers through tax dollars. Well, not surprisingly, after a whole lot of backlash across the board from people of all political spectrums, everybody said that this was a completely dumb idea, and that's where they decided to scratch this. And then the Treasury Secretary and the IRS came out and said that instead of proposing a $600 rule, they want to do a $10,000 rule where they will now need to know every transaction that you make over $10,000. Now, at first glance, you're going to say, all right, this is going to help align with their goal to see all transactions of wealthy people, anything over $10,000 that you make, because now they're going to see these transactions and they're going to be able to find the tax evaders, because now you're going to be able to see all these bigger money transactions. So now the new proposal is if you see $10,000 leave your account, whether it's through a wire transfer, whether you're buying something, whether you're moving money into your stock brokerage, whether you're buying anything, you move $10,000, the government, the IRS wants to to know about it. The whole idea being they want to know if you are evading taxes or doing something illegal. Now, the question is, how many wealthy people are really doing these illegal activities out of their personal bank accounts? Because if you really think about it, the millionaires and the billionaires who are evading taxes, they're not doing that with money in their bank accounts here in the United States. They're doing that either with non-cash assets, so they're moving money around in different ways, not in their bank, because they know that banks are also monitoring them and they don't want to get in trouble with their bank, or they're doing it with accounts overseas. Again, if you're looking at this strictly financially, understanding the goal and the cost, the goal is to find the wealthy individuals, people that are worth billions of dollars that are doing tax evasion illegally. So if that is the goal, because that's what they keep saying, but they want to monitor transactions that are over $10,000, what is the cost of that going to be? Because guess what? It's going to take a lot of $10,000 transactions to reach $1 billion, let alone the hundreds of billions of dollars that they're hoping that they will be able to find. And so if the goal is to now be able to bring in hundreds of billions of dollars worth of tax dollars through finding these illegal tax transactions, you are now going to have to spend an insane amount of money to monitor what transactions over $10,000. So if you go out and you buy a nice furniture set for your home, they're going to want to monitor that too. So this $600 rule, which is now the $10,000 rule, really comes down to two different questions. You have the question of privacy, and then you have the issue of cost. Now, already our privacy is compromised because you have things like Alexa and Siri listening to every single thing that you say. But now the question is, where do you draw that line? Do you want the government monitoring every single thing that you do with your bank account? Or is that really an invasion of privacy? And if you think so, then this is not something that you would want. But again, you can make that decision for yourself. Do you want the government looking at your bank account and seeing every transaction that you make that's over $10,000? But now if we look at the financial cost of this is going to be very expensive on the side of banks. It's going to be very expensive on the side of all financial institutions, which is going to then come down to the cost of consumers, which means you might have to pay more money to now move money or do anything with your money. And it's a much higher cost that you're going to have to see from the government, and the government is already drowning in debt. And what they want to do to fix that is they want to spend more money. So that is their solution to the problem. And that's where financially this cost might come back to you in the form of higher taxes or higher inflation, which brings me to number 2. I want to talk about taxes. So I know in the beginning of this video, I said that I was going to talk about inflation second, but I think taxes fit a little bit better here. So let's talk about taxes, because the Biden administration has proposed tax hikes because they want to raise taxes on the wealthy and the high income earners as a way to pay for the higher government spending. Now, there's a couple things that I want to mention here. Back when President Trump was in office, he enacted some tax cuts across the board. So whether you were making a little bit of money or a lot of bit of money, chances are you saw a tax cut. But these were temporary tax cuts which are expiring now. And so you're already seeing tax rates go up across the board because the Trump tax cuts were a temporary tax cut. They only lasted a few years. And now we're starting to see tax rates go back up, not because of President Biden, but because of President Trump tax cuts are expired. Taxes are how the government makes money. The government is not a for-profit entity. They make money when you and I go to work, and then we pay taxes based off of the money that we earn. That's how the government makes money. And then they take this money that they earn and they use this money to pay for all their expenses. They pay for firefighters, they pay for police officers, they pay for teachers, they pay for their infrastructure, they pay for their politicians, and they pay for everything else in between. Whatever packages or stimulus programs they want to do, that's the money that they have to pay through taxes. Now, the issue that the government has been facing is that they have been spending more money than they earn. That's why we have a national debt crisis. We have national debt because the government has been spending more money than they bring in. Right now, our national debt is hovering at around $29 trillion, which means that the United States government has spent around $29 trillion that they did not have. And so now we have this national debt crisis. And this is where the government now, in order to compensate for all of this national debt, to compensate for all of the spending that we've seen, and a big chunk of the spending happened in 2020 and 2021 through all the trillions of dollars of stimulus programs, in order to fund all of these stimulus programs and pay back this debt, because the United States government has to make payments on this debt, and now their payments are going up, just like with your credit card. If you spend a whole bunch of money on your credit card, your minimum payment's going to go up. Well, now the government's payments are going up, and they need more money in order to continue spending and paying off their debt. Anytime you hear the government is spending money that they don't have, that means the national debt is going up. When the national debt goes up, that means their minimum payments go up. When their minimum payments go up, that means more of their tax revenue is going not to benefit you, the taxpayer, is to pay off all of this back national debt. And so now we are in a position where a lot of our tax revenue is going to pay off this national debt because our national debt is ballooning at the fastest rate ever. And this is where now the United States government is saying, okay, we have to do one of two things. Either we have to cut spending or we're going to have to raise taxes. And right now, it doesn't look like the government wants to cut spending, so instead, they want to raise taxes as a way to generate more revenue to now pay down some of this national debt and spend more money. There are three main areas where the Biden administration wants to raise taxes, and they also want to increase the amount of audits that we have. So they want to increase taxes on our personal income tax rates. These are the tax rates that you pay when you go and earn money from your job. They want to increase the tax rates that you pay on your investment income, and they also want to increase the tax rates on corporations, and then obviously they want to increase the amount of audits. So let's talk about these personal tax rates first. We're going to see your personal tax rates go up because the President Trump administration's tax rates are expiring. Now, what the Biden administration wants to do is they want to raise the top tax rate from 37% to 39.6%. Now, none of this has been finalized yet because it's not approved, but the goal is if you make over $523,000 or so a year, then this is going to apply to you. If you make under $500,000 a year, then you don't got to worry about this because this is only changing the top tax rates. So if you're making less than $500,000 a year, the only tax changes that you'd have to worry about are the expiration of the previous tax cuts, if that would affect you. But if you make over $500,000 a year, then your top tax rate will go up. So the people that this is going to affect the most are going to be your high-paid professionals, your doctors, surgeons, your accountants, your high-paid professionals and executives who are now earning a big salary because now your top tax rates would go up if this gets approved. The second change has to do with capital gains rates. These are the profits that you have to pay on your investment profits. So if you buy a stock for $10 and you sell it for $20, that's a $10 profit. That is your capital gains taxes. Now, capital gains taxes are taxed at a lower rate than your regular income taxes. So if you own a stock for longer than a year, this is considered long-term capital gains rates, and you would be paying a lower tax rate than the tax rate you would make if you earned that same money from your job. Right now, the top tax rate on capital gains rates is 20%. So if you sell your investment for a $10 million profit, the top tax rate that you'd be paying is 20%. The Biden administration wants to change that. Originally, they said they want to change it from 20% to 39.6%. And then a lot of people, a lot of politicians had issues with that. And now they're proposing bringing it down to something around 25%. So if you make $1 million or more, then your top tax rate would go up to somewhere between 25 to 39.6%. Again, it hasn't been finalized, but they're saying now around 25% would be their goal. So this would apply to all investments like stock market investments, your real estate investments, assuming you don't do a 1031 exchange or anything else like that, and your cryptocurrency profits, assuming you have more than $1 million a year of income or profits. So again, if you're an investor, which I think all of you who are watching Minority Mindset are, if you're an investor and you make more than $1 million a year, then these tax hikes would affect you. But if you don't make $1 million or more a year, then you don't got to worry about this. Then we have the proposed corporate tax rate increases. So right now, corporations are paying 21% a year in taxes, and Joe Biden originally wanted to go to 28% a year, but now the Biden administration has brought it down to 26.5% a year because they said that they wouldn't be able to get it approved at a 28% a year tax rate. Now, the interesting thing about this is a lot of people assume that, hey, if I don't have a corporation, I don't got to worry about corporate tax rates. But that's not the case. Yes, corporations are the ones that would be paying these higher tax rates, but ultimately that tax rate also flows down to consumers, people who are buying products, because if corporations aren't able to maintain a certain profit margin because they have to pay higher expenses or they have to pay higher taxes, well, then that ultimately flows down to the prices of their products, their goods, which then you pay for. So if corporations are not able to maintain a certain profit margin because they're paying higher taxes, then they might have to raise the prices of their products, which means that you might be paying more money because now corporations are paying more money in taxes. Plus, as a little bit of tax law, corporations pay taxes twice. The corporation pays taxes when the money is earned. So if a corporation has a profit, they pay taxes on that. And then they pay money anytime this money is paid out from the corporation. So when a corporation makes money, no person makes money. It's just the corporation making money. But then when the corporation takes this money and they pay it out to their owners or their employees, then this money is now taxed again. So corporations have to pay taxes twice. This is the tax on their first layer when the corporation makes money. So this is now the first 21% or 26% of every profit dollar that comes in. They have to pay in taxes, and then if they pay this money out, they're paying taxes on this money again, because now when you receive this money, you have to pay taxes on that money. And then we have more potential tax audits because the White House has said that they want to allocate more money to auditing households that are making over $400,000 a year to make sure that you are not evading your taxes, because if they are, they want to audit you, and then they want to fine you and make sure that you pay your fair share. Remember, the government uses taxes as a way to cover their spending. They have to cover the previous spending, which is the national debt, the spending that they didn't have money to pay for, and they want to use these tax dollars to help pay for future spending, like the $2 trillion infrastructure package that's in debate right now. So the reason they want to raise taxes is to pay for their spending. And so if they raise taxes in these areas, these are the people that will be paying for this type of spending. And if they do not raise taxes, well, they're still going to spend money, but now the cost has to be paid for by somebody else through inflation. The average person who now has to pay for higher prices at the store, has to pay for higher prices for vacations, and has to pay for higher prices for everything else, because now when they don't have the money to pay for their spending, they don't cut their spending as you and I would have to do if we don't have money to go out and go shopping, but the government can just print this money out of thin air thanks to the help of the Federal Reserve Bank. So if the government wants to go out and spend money, they don't have the tax dollars to do that, then what do? Well, they just print this money, which brings me to number 3. Inflation is when the value of our dollars go down, which causes the price of things to go up. See, money has 2 different components. It's supposed to be a store of value, and it's also a means of exchange. So you can really understand the store of value part if you compare money to gold, because gold is real money. So it takes time, effort, and labor to mine an ounce of gold, which is why it is money, because this representation of value is the physical gold. It takes time, effort, and labor to mine the ounce of gold, and now you have a physical ounce of gold. Our dollars don't represent value in the same way because our dollars are just pieces of paper. It costs 12 cents to print a $100 bill, and you can print this money essentially out of thin air. So it is not a real representation of value in the same way, because the value that our dollars have are not through a physical representation of something. It's through a promise by the United States government. It is backed by the full faith and credit of the United States government, and the United States government promises that our dollars have value. Now, that's not a problem when our economy is growing, when we're the strongest military presence in the world, when we're the strongest economy in the world, and when the dollar is the world's reserve currency, because not everybody wants to own the dollar. But if that was ever challenged, if we're ever challenged as the world's strongest economy, if the dollar is ever challenged as the world's reserve currency, that's when it will turn into an issue, because people are going to realize that these dollars that they're working hard to earn, these dollars that they're working hard to save, don't really have that same store of value that they thought they did, because these dollars aren't a real physical store of value. It's a store of value based on a promise by the United States government. The second component of money has to do with a means of exchange. Our paper dollars are pretty good means of exchange, especially when you compare it to gold, because if you want to go out and buy something and you have a gold bar, well, then you're going to have to chop it into little pieces and then use that gold to buy things, and you got to carry around these huge pieces of gold, which is very heavy and not easy. So gold is not a very good means of exchange. And if you want to transport a whole bunch of money, gold, from one part of the world to the other, that's not very easy. But it's easier when you have cash. You can put this cash in your bank account and you can transfer this money. So it's a lot easier to do it when you're talking about paper than gold. But the problem with paper compared to gold is that it doesn't store value the same way that gold does. This is where cryptocurrency comes into play and is trying to solve some of these problems. But just focusing on this issue of inflation right here. So our dollars are pieces of paper. And as you have more dollars enter our economic circulation, this causes inflation to happen, because now the value of each individual dollar goes down. Think of it like toilet paper. Back when the 2020 pandemic happened, there was a scarce supply of toilet paper in the world, and toilet paper became so valuable. Everybody wanted their hands on toilet paper. So if you wanted toilet paper, you were willing to pay good money to get your hands on some toilet paper. But nowadays, toilet paper is in abundance. And toilet paper doesn't cost that much because there's an ample supply of toilet paper in the world. Our dollars kind of work the same way. When there is an ample supply of dollars in the world, well, then each individual dollar doesn't have as much value than you would if there was a limited supply of dollars. Because if you had a little bit of dollars in the world, then each dollar would have more value, because people understand that these dollars are what you're using to buy things, and if you have more dollars, you can buy more things. But now, when you have a whole bunch of dollars out there, each individual dollar isn't worth as much. Every time the government spends money it doesn't have, that means it didn't raise this money from taxes, that means it has to now print this money, and now when you print this money and you inject it into our economy, it causes more inflation. And the person who pays the burden, the price of inflation, is the average person who doesn't understand inflation. The financially uneducated, because now you have a fixed income, you have a fixed salary, you're working hard to earn this money, you're working hard to save this money, and then everything around you keeps getting more expensive. Your rent gets more expensive, your groceries get more expensive, your vacations get more expensive, and so you're working hard to earn the same amount of money, but you're becoming poorer each and every day because your dollars don't stretch as far. This is why inflation is known as a hidden tax, because now it is taxing the average person, right? The government has to fund their operations somehow, and either they're going to raise taxes and now you know who's paying the price, or if they don't raise taxes, they're going to print the money, which causes inflation, which is now a hidden tax on the people who are financially uneducated. Now, to be fair, all the inflation that we're seeing right now isn't just because of President Biden. I mean, President Trump also printed a whole lot of money when we saw those massive amounts of stimulus checks and massive amounts of bailouts and massive amounts of other programs, stimulus programs that he passed. He passed the first $2 trillion stimulus program, and then he passed another one later in 2020, and then President Biden passed another stimulus program, and now President Biden is trying to pass another $2 trillion infrastructure package. So it's not just President Biden. We saw it happen during President Trump's time. We also saw it happen during President Obama's time, and we also saw it happen during President Bush's time. So it's not something that just happens in one party. You see it happen across different parties. If you spend more money than you earn, the price has to be paid for by somebody. If it's not paid for by taxes, it's paid for by the person who doesn't understand inflation. So this is something that you have to pay attention to, not just as an investor, but as a financially educated person, because anytime you hear about more government spending, if they do not have the money to do that, because already the government doesn't have enough money to pay for their expenses as it is, that money has to come from somewhere. There's no such thing as a free lunch. What does that mean? If you don't understand who's paying the price, then it's probably you. This is, again, why financial education is so important. That way you can do things to take care of your own finances. That way you can take care of yourself, your family, and your community. If you like what you saw so far, then you're gonna love this. If you're between the ages of the early 20s and the early 40s, then chances are you've had to go through a lot of things financially that older people didn't have to deal with. For one, previous generations didn't have to drown in debt just to get a college degree, and then when you got a job, previous generations had something called job security because people would just work at the same job for 40 or 45 years, and then previous generations never had to really worry about retirement because retirement was essentially spoon-fed to you with the help of pensions and Social Security. Now, pensions have become a thing of the past, and Social Security, woo, Social Security is drying up. Now, my goal is for you to make smart financial decisions today. That way you can live your life the way you want tomorrow without relying on other people or the government to take care of you. And the kind of crazy thing and sad thing, and the thing that really just kills me to see, is that although a lot of millennials and Generation Zers, because it's even worse for Generation Zers, although a lot of young people have started to understand that Social Security might not take care of them the way that they might expect, you still have 3 out of 4 millennials that are expecting and hoping Social Security to take care of them when it comes time to retire. Newsflash, you do not want to rely on the government to take care of you. But Jaspreet, I've been paying Social Security taxes every time I get paid. I should get paid back. You're right. You are investing your money into Social Security. That way when it comes time for you to retire, you can use this money and some, because hopefully the government will invest this money the right way and give you more money when it comes time for you to retire, so you have an income when you retire. But the only issue with that is Social Security is drying up. So your Social Security money that you're paying right now is paying for older people to retire today. It's not going to be going to fund your retirement. Now, this is not supposed to be a video about Social Security. Sorry about the rant. What I want you to understand is that there are certain factors out there that are screwing millennials financially. So you want to understand what the system is doing. That way you can be smart with your money and build your wealth, even though the majority of people keep getting screwed by the system. There are 4 main ways that young people are getting screwed by the system: through the education system, through the cost of living, through what's happening with savings accounts, and what's going on with your investments. I'm going to first be talking about these 4 things. Once I finish up with that, then I'm going to be talking about what you need to do. So let's start with number 1, education. The system that pretty much all of us, including me, are taught is that you need to go to school. Then after you finish 12th grade, it's time for you to go to college. And then if you don't have the money to go to college, if you don't have rich parents, you got to take on some student debt to go to college, and then after college, if you really want to get an advanced degree, you got to go and become a doctor, a lawyer, an engineer, an accountant, something like that. You got to go and get a specialized degree, and then you got to take out some more student loans to do that. And once you got this specialized degree, now you can enter the workforce with a mountain of student loans, but now at least you can make a decent living. I have some very strong opinions on this, so hear me out. My parents are traditional Indian immigrants from a state in India called Punjab. And when they came here, they wanted a better life for me and my brother. My parents came to this country with next to nothing, and they busted their butt that way me and my brother could have a better life. Now, the way that most immigrants, especially immigrants from India, feel that you can have a better life is through education. Because if you can get educated, if you can get a good degree, if you can become a doctor, now you can earn a good salary, you'll be able to have bigger savings, and you will be able to live a good life financially. Now, the issue that I have with education is that I went through a lot of schooling. I finished up my 12 years of high school. Then I went to college. After college, I went to law school because I told my parents I didn't want to be a doctor, and they were like, no way, we can't have that. You got to at least become an attorney. So I went to law school, got my law degree, and well, I don't really use my degrees the way most people would expect. I have the same conversation with my uncles and aunts all the time. I start off by talking about how school is dumb. And then everybody says, oh no, school is not dumb. You have to go to school to get your degree to become successful in life. But the thing that I need you to understand here is that education is the backbone to success. School is not the only place you can get education, and the issue with school isn't just school. Let me talk about this a little bit deeper. I can pretty much guarantee that I would not be where I am today if it wasn't for the schooling that I went through. Now, you might hear that and say, wait, how can you say that, but then at the same time say these bad things about school? Well, the value that I got from school wasn't in the classroom. When I was in college, I majored in a subset of psychology, and I took a bunch of biology classes. I took a bunch of psychology classes. I took a bunch of physics classes, I took a bunch of math classes, and I honestly don't remember anything that I took. For the last 2 years of my college degree, when I was trying to find psychology classes to take, the thing that I paid attention to was what room my class would be in, because we had this one big lecture hall which had these really soft cushiony seats that kind of reclined, and I knew that if I took a class there, I could fall asleep in class. Most of my college classes were completely worthless. Now, this is not to say that these classes were bad classes. They just weren't for me. I wasn't interested in them. So I would just go there and take a nap. It was a waste of money for me. But there were some classes that I really, really loved. I took a class on real estate investing. I took a class on marketing. I loved those classes, and they really got me thinking. Those were the classes that I paid attention in, and I did really good in those classes. I did pretty decent on my psychology classes that I slept through because I just learned how to study, and I would cram all this information for the exam, and then right after the exam, all this information would just leave my mind. So I don't remember anything that I learned in the vast majority of my classes, but there's a few classes that I absolutely loved, and I got a lot of value from those classes. Couple that with the education that I got outside of the classroom, because when I was in college, that's when I got into entrepreneurship, and I started a few businesses of my own. And so I got to network with other entrepreneurs. I got to start my businesses, and I had this kind of cushion when I was starting my businesses because I was still in school, so I didn't have that real pressure of making money tomorrow because I wasn't in the real world yet. I was still in school. So school had value for me, but not in the traditional way. The issue that I have with their education system is that our education system has not changed since the Industrial Revolution. We still churn out educated students like we do factories. You come in, you sit in a classroom from 9 to 5, and you read books, you just kind of listen to whatever the teacher says, and then you leave. Now, obviously that's changing because of the pandemic with the work from home type of stuff, but at the same time, we haven't really changed the way that education works. We need to, if we want to be competitive in the world, we need to promote innovation. We need to promote creativity. We need to promote sciences and maths, the things that are actually going to keep us competitive as a country and as people, instead of just farming out students, just passing out these degrees. Our society has kind of built a stigma that this is the way that you need to become successful. You need to go to school, then you got to go to college, then you get a higher level degree, and then you can go out and enter the workforce. And if you don't do that, if you do something different, then you're looked at as weird, you're looked at as dumb, you're looked at as broke. But the reality is that there are so many other opportunities out there, and we need more people to look at these opportunities. So we as a society need to really start pushing and educating people about the different opportunities out there, like trade schools and creative fields. That way people have different opportunities, because some people should not be going to school the way that they are. They're just racking up a whole bunch of debt, they're graduating school, and then they're wondering, what do I do now? The average person in America graduates college with something like $40,000 of student loans. You're 18 years old. All of your friends are going to college. All of your teachers keep telling you to go to college. All of your friends keep telling you to go to college. Every aunts and uncles tell you to go to college, and you have no idea what you want to do. And so you just sign the paperwork for these student loans because you have no idea what $40,000 is actually going to cost you. And so you just go to college, you start taking a bunch of classes, you have a lot of fun because college is a lot of fun. There's a lot of fun in college. I had a great time in college. But then you graduate college, $40,000 in debt later, and now you're trying to figure out, okay, what am I good at? What are my skill sets? What kind of job can I get? What kind of job should I get? And now you enter the workforce, you're making $30,000 a year, you have $40,000 worth of student loans, now you want to go out and buy a car, you want to buy a home, and you're trying to figure out how do you make ends meet. This doesn't mean that traditional schooling is useless. If you want to become a doctor, an attorney, an accountant, an engineer, you have to go through schooling. You have to get these degrees, you have to get that education, and we need these fields. These are important for our society to function, but we want to have the best people doing this. We don't want people doing this who just want a big paycheck. We want the people doing this who actually love what they do. And I was going down the medical route for all the wrong reasons. I was going down the medical route not because I loved medicine. I mean, I thought I loved medicine, but the real thing that I loved the idea of was just being financially secure so I could take care of myself and so I could take care of my family. But if you want to become a doctor, an attorney, an engineer, an accountant, whatever it is, you should be doing this because you love what you do, not just because you love the idea of the paycheck that you could get, because we need people who are actually good at what they do and who love what they do, not just crappy people in these positions who are trying to make a lot of money. The reason why I keep hammering this point is because there are so many ways for you to become financially successful without having one of these degrees. If you can have one of these degrees and you love what you do, yes, you can become very financially successful, but that's not the only way to become financially successful. You can do something else, find something that you love, and become very financially successful and be more fulfilled and do a better job at what you do if you just care about what you do. And if you don't care about what you do and you're just doing it for a paycheck, then you're doing it for all the wrong reasons. You're hurting yourself and you're hurting your patients or your clients. So when it comes to education, the issue that young people have is right now, everybody thinks that they need to go to college, or everybody thinks that they need to get a higher degree. That way they can be competitive in the workforce because everybody has a degree. Now you can compare that to the previous generations where very few people had a college degree. And so one, college didn't cost as much. And second, if you had a high school degree, you were competitive. If you had a college degree, you were very competitive. Nowadays, if you have a high school degree, it doesn't really matter. No one cares. Everybody has a high school degree. If you have a college degree, same thing. Everybody has a college degree. Now you need to have an extra layer of degrees or certificates to be competitive, which is one of the reasons why it's costing more money in order for people to actually survive. But now on top of that, the price of education has skyrocketed, partially due to the fact that the United States government will federally guarantee student loans. So colleges heard that and they said, oh, so we can charge whatever we want, and you, the government, will make sure that you loan students whatever money they need? Okay, so then colleges started hiking up their tuition rates, and now it is extremely expensive for someone to go to a four-year university, and everybody feels that that is the only way that you can become financially successful. So everybody's going to college just trying to figure out how they can get a degree and become successful. You graduate school with tens of thousands of dollars with the student loans, and then you enter the workforce with no idea of what you want to do or how you're going to make money. We have to improve our education system if we want to continue to be competitive as a country, because so many countries around the world are working on ways to innovate their education system and make the education system more accessible for people and to make their education more beneficial for their students. And so us as a society, we need to see reform and we need to see an improvement in the way that we educate our students, because education is the backbone for success. And we need to improve the type of education that we're giving our students so people can continue to stay competitive in the future. The second way that young people keep getting screwed over by the system is because what we've seen happen decade over decade over decade is that our paychecks get bigger, which is good, but the amount of buying power that our paychecks have keep getting smaller. And so while it looks like you're making more money because the size of your paycheck is bigger, you're actually broker than previous generations were before, because the cost of living, the price of everything, keeps going up faster than your paycheck. Let's take a look at the numbers. Between 1970 and 2021, wages have gone up by around 800%. Now that looks good when you look at it by itself, because it tells you that people are making more money now than they did about 50 years ago, which is good. But that's just looking at one side of the coin. Yeah, you made more money, but you also got to look at the expenses. At the same time, housing has gone up between 1970 and 2021 by 1,500%. Your wages are not keeping up with the growth of housing costs. The cost for you to go out and buy a car has gone up by around 1,100%. And that's not all. What about healthcare? Healthcare costs have skyrocketed. Healthcare costs have gone up by just over 1,500% between 1970 and 2021. Now, that 800% wage growth doesn't look as attractive when you compare to all of your expenses. But it's not just a higher cost of living, it's also a higher standard of living. Because back in 1970, no one was buying an iPhone, no one bought a cell phone, nobody bought Lululemon leggings, people weren't buying extra guac. And so our standard of living has gone up as well. And so not only do we have a higher cost of living, but now you gotta add in new costs because people gotta have all their electronics, all their accessories, their smartwatches, their smart TVs, on all the other fancy technology that we have now, in addition to the higher cost of living. So how do you make up for this? Well, one of the things that people are doing now to make up for this is 2 people are working in a household today, unlike in the 1970s and before, when you typically had a household with only 1 person living. So you have 2 incomes now versus 1 income. On top of that, more and more people are turning to debt because if you want to keep affording life and you want to keep your standard of living by having all of your nice things and your 2 household income cannot afford it anymore, well, now what do? You go to the bank, you get a credit card, you open up a line of credit, and now you got some extra cash to go out and live your lifestyle. And now you're playing the payments game where anytime you get paid, you're using your money not to build your own wealth, but to pay off all the things that you bought that you couldn't afford in the first place. By the way, if you're a money nerd and you're trying to figure out why the cost of living has skyrocketed so much, well, this has to do with the fact that around the 1970s, that's when the United States dollar was taken off of the gold standard, and that's when we started printing more money, which caused more inflation, which caused the value of our dollars to be diluted, which made the price of everything else go up. If you want to learn more about that and what has caused all this inflation over the last number of decades, I already made a video where I talked about this, and I will link that video for you in the description below. The third reason why young people keep getting screwed over by the system is because of what's going on with our savings. If you could believe this, there were previous generations that became wealthy just by saving their money because savings accounts paid you a good enough interest rate where you didn't have to rely on your investments. If you just saved a little bit of money, you were going to be able to retire because now you had your savings, and then you had pension, and then you had Social Security. Nowadays, we live in a society where if you can get a 0.5% interest a year on your savings account, you are in the cream of the crop of savings accounts, and you are getting some of the best interest rates out there. Most savings accounts right now are paying something closer to 0.1%, if not 0.01% interest on their savings accounts, which means if you are able to save up $1 million and you save all $1 million in your savings account, your bank is going to pay you a whole less than $10 a month in interest on your savings on $1 million. Again, just look at the numbers. In the mid-1980s, if you went to the bank and you put your money into a CD, a certificate deposit, whether it was a 6-month CD or a 1-year CD or a 5-year CD, you could get more than a 10% annual interest rate on your money from your CD. This is just by saving your money in the bank. You could get a 10 or 11, almost 12% interest rate a year on your CDs. Now, people can't even get that on their investments, but before, people could get that in the bank. This is one of the most obvious places where people who are financially educated are being rewarded and the people who are not are being screwed. Again, let's just look at the numbers. If you go and you save all of your money at Bank of America, not only are they going to charge you maintenance fees, but they're going to pay you 0.01% a year in interest on your savings. But now, if you took your money and you invested it into the Bank of America stock, they're going to pay you a 1.7% annual dividend because you invested in the Bank of America company instead of keeping your money at the bank. It's not just the Bank of America. Let's take a JP Morgan Chase Bank. If you go and you save your money at Chase Bank, they're going to pay you, again, 0.01% a year on your savings. But if you invested your money into the JP Morgan Chase Bank stock, now you own a piece of the bank and they're going to pay you a 2.2% annual dividend on your investment. A dividend is a cash payment that a company will pay you just for investing in that company. What this tells me is that these banks are making huge profits. And if you're financially educated, and if you invest your money into the banks as an owner of the company, well, now they're going to reward you for that. But if you just save your money at the bank like the majority of people do, they're not going to reward you for that. Now, of course, when you invest your money into a stock, that comes with more risk, because when you invest into a stock, the stock market could go down, something could happen with that company, and you could lose the value of your investment, versus when you just save your money, you don't have that same risk. But you kind of got to understand what's going on here. Banks are able to afford these huge dividend payments, but they're not going to pay you that interest on your savings. This is why, again, it pays to be financially educated, and the people that are not financially educated keep getting screwed over by the system. Now, by the way, if you are interested in learning more about how you can actually build your financial education and learn how to manage your money the right way, I'm not going to go over all of that in this video, but we do have a free PDF on money management and investing that will walk you through the financial education that you need, that we all should have learned when we were in school. If you want to download this PDF, it's completely free when you sign up for a daily newsletter, and I got the link to how you can download this PDF in the description below. And the fourth way that young people have been screwed over by the system is through their investments. So young people are fortunate or unfortunate because we have gone through 2 once-in-a-lifetime crashes in just over 1 decade. First, we went through the 2008 real estate collapse. This was a once-in-a-lifetime crash where we almost saw the entire financial system come crumbling down. And then things started to recover, and then came the 2020 pandemic and recession, which was again a once-in-a-lifetime type of crash and recession. And so young people saw their life investments, they saw their savings go at risk, and they saw their investments get slashed in half almost overnight. And what happens during these crashes is many people sell out of panic, out of fear, because many people are not financially educated, and so many people lose a huge chunk of their life savings when these crashes happen, and chances are we're not out of the water yet. Now, one of the reasons why I said that young people are fortunate for these crashes is because the people that are financially educated kind of benefit when these type of crashes happen, because market crashes and recessions are where more millionaires are born than any other time, because that's when investments go on sale. And so you can go out and you can buy investments and assets at a discounted price, and now you can own way more investments and you didn't have to put in all the money because everything is on sale. The issue with that is that most people don't learn that until it's too late. They see their investments go up and they feel great, and then things come crashing down, and then they panic and then they sell, and then you see a huge chunk of the country lose their life savings, they lose their investments because they didn't know how to manage their money the right way. And so when we talk about investments, everybody's told, hey, just invest your money to the 401k, just invest your money in the market, but they're never told how to manage their emotions. They're never told the risk management system. They're never told the psychology part of the investments. And so you invest your money thinking that your investments are only going to go up because that's what everybody says. Everybody says that the stock market is going to grow by 8 to 10% a year. And you think, okay, fine, I'm going to put my money in the market. And then as soon as you start investing, you might see some growth, which makes you happy. And then when things start coming down, you don't know what to do. And so when you see your portfolio in the red, what do? Well, you sell to cut your losses. But now, even if we take a step back and we look at our asset classes from a broader kind of high level standpoint, we are kind of on choppy waters as a country because we've been printing so much money. Our economy isn't as stable as it used to be. And so we kind of see these huge wild swings in the market where back in the day, you didn't see the same level of volatility that you see now. I mean, yeah, you still had volatility back in the day. Everybody has seen volatility. Everybody has seen emotion in the markets. Everybody has seen market crashes. These things have always been there and they will always be there. But the level of volatility that we have now is much more than we have ever seen in the past. And so if you don't have the financial education or the risk management or the psychology now as an investor, you can really be the one paying the price because it can be very painful to see a portfolio in the red. So now the question is, at this point, what do you do? You're a young person that's working hard, you're trying to save some money, try to invest some of your money. What do you do to build your wealth? Well, the first thing you got to do is you got to get financially educated. You got to learn about money. You got to learn how to save your money the right way. You got to learn how to live below your means. Then you got to understand how to invest your money. What are stocks? How does stock market investing actually work? How do you analyze a company? You got to learn about real estate investing. What is real estate investing? How can you build cash flow through your real estate investments? And cryptocurrency, because this is such a hot asset class right now, you want to understand what you're investing in, and you got to understand basic investing principles. What is debt? What is the cost of margin? And if things go down, what is going to happen? Because we have a lot of young people trading money, investing money on margin who don't really understand the cost of this debt, because if things slow down or if we see things come down, then that can become very expensive. The very first thing that you got to understand is that you need to have savings. Everybody needs to have money in the bank account to protect you from an emergency. Now, I know I talked about the issues with savings earlier because savings accounts are paying you nothing. But what you have to understand about your savings, especially now, is that your savings are not there to make you wealthy. Your savings are just there as a shield to protect you in case of an emergency. So you gotta have some savings, and the only reason why you should be saving besides for an emergency is to make a big purchase like a house or a car, or to save money to make an investment. If you already have a year's worth of expenses saved in a savings account and this money is there for your emergencies, and you don't have any big purchases coming up, and you just keep saving your money, not for an investment, but just saving it because you think that's the best purpose for your money, well, now you're getting screwed over by the system because inflation is eating away at the value of your savings. If you want to save money for an investment, maybe you're worried about the price of assets, maybe you can't find a good value asset, maybe you don't know where to invest your money. That's okay. You can save this money until you're ready to invest, but you gotta at least have that intention to invest this money. Next, when it comes to your investments, the next issue that a lot of people are making is they're investing their money based off of emotion, based off of hype, based off of what everybody else is doing, instead of actually doing the analysis themselves, right? A lot of people have this feeling of, how can I get rich quick with my investments? What can I do with my money to double my money? How can I get 100% returns on my money? And these are the type of returns that are not sustainable. So you gotta be smart as an investor, you gotta know what your goals are, and you do not wanna be one of the people that is trading or investing on emotion, because the people that make the most money over the long term are the people that invest on financials, not emotions. Emotions can make you a lot of money very quickly, but you can also lose that money just as fast. This is where, again, it pays to be financially educated. This might not be the most attractive thing for you to do, but this financial education is what will build you wealth over the long term, not just the short term. Again, if you want to learn more, we have a free PDF that you can download in the description below. We have tons of videos on our YouTube channel, and you can check out our website, theminority.mindset.com, because we're posting new articles every single day that will help you be better with your money. Thank you for watching. If you enjoyed this video, here's a video on building wealth that you should watch, and while you're at it, download our free guide on how to start investing your money in the stock market. And as always, keep hustling. And now you enter the real world and you get a job, and now you need an apartment and you need a car to get to and from work. And so now you got these student loans, you got your car payment, and you got this apartment fee that you got to pay,